guys, this is 𝙂𝙊𝙇𝙍𝙍 at 𝙂𝙊𝙇𝙍.com, and I'm here to do a follow-up video to what we had talked about a week ago, having to do with your financial freedom. So I wanted to remind you guys what video I'm talking about. So we're going to go over to the channel, and I'm going to talk about lumber futures here in a minute, but we're going to go over to the channel, and the video that I was talking about is how to manage your financial freedom. We did a video on that, and I talked and I presented on that how I'm going to be doing a course on how to manage your investments to reach your financial freedom, because people had been asking. We asked the question on YouTube community and on Twitter, what's your biggest worry, or what's troubling you the most financially? And people said, how do I manage investments into retirement? How do I know when to get out? How do I know how much that I need? And I did a presentation in this video here, fairly high level, but very important, about one, changing your mindset, and two, there's a 4-step plan that we've developed to help you do that. And so I'm going to be teaching a course on this, but I feel like I didn't give enough of a preview over what we'd be talking about there. So I wanted to put a little bit more meat behind it. And that's what I'm going to do today. I'm going to give you a couple of examples, kind of wet your whistle and let you know what we're going to be talking about. And we're going to go into a lot more depth when you actually release the course. But I'm going to give you a couple of examples to help define that 4-step process for you, so you understand what the course is going to be about. So without further ado, let's get back into the presentation. So what you guys should be seeing on your screen now is part 2, financial freedom and planning your exit. And when I say planning your exit, I mean you should always have your exit in mind when you make a financial investment. So let's say you're buying some farmland because you know that farmland traditionally does well over time. It's a longer term investment, and you may have a 10 to 20 year time horizon. I know I have some, and I have a very long time horizon for that, but you still need to have your exit in mind even when you purchase the property. You need to know why you're buying that property. You need to know how long you're going to hold it for. You need to understand the financials the entire time that you hold that property. And you need to know when you're going to get out. And I mean, when can either be a specific day, a specific month, a specific year, or it could be reflected in market events or shaped by market events. So you say, I know that I'm going to go through 2 real estate cycles here, and by that time, I'm probably going to get ready to retire. And in that case, I'll want to go ahead and sell it and use that money for my retirement. So that's the type of planning that you're going to do. Always plan to have your exit in mind, any investment that you buy. And that can go with day trading Forex. You know, I used to day trade currencies, right? And you're trading the US-European pair, the US dollar and the euro pair. And you're like, you know what? I may be in this for exactly 5 minutes, or I may be in this for exactly until I see a certain pattern on the chart, and then I'm going to exit out. And one of the things I'll be covering in this presentation is when you exit out, especially if you have one of these more liquid investments like a stock or a Bitcoin cryptocurrency, or, you know, or you're trading HBAR or XRP, you know, or you're doing Forex or something in which you have a fairly large position, you may not want to sell all at once. There's a way to kind of stair step your way out so that, one, you don't influence the market. It depends on your liquidity. So we'll talk about that in the presentation as well. I'll touch on that during this video, but then when we actually develop the course, I'm going to go into that in great detail. I'm going to have a lot of charts. I'm going to walk you through in detail how to exit out your position when you're in one of those types of investments. If you're in the aforementioned real estate investment I talked about, it's going to be a little bit different on real estate. You want to count back how many days it is to sell. You want to already know ahead of time how many days properties are on market and how long it takes to sell. And then you're going to count back and add a few extra days so you can get your real estate agent, you can get the sign out, all of that, you get the property rate, all that kind of stuff. So we'll talk about it in real estate too. It's a little bit different. I did that for 18 years. I bought and sold real estate. So we're going to have a lot of detail on that in the course. Okay, so without further ado, let's get further into part 2 of financial freedom and planning your exit. So going back to strategy, how to execute, we want to do a risk assessment. We want a proper asset allocation, liquidity for each asset, and exit strategy. So risk assessment is knowing all the risks in the market. I'll get into that here in a moment. Asset allocation is what type of assets you're going to have and how much of your wealth you're going to allocate and how much of your money you're going to put into it, right? You need to make sure that you're balanced in your asset allocation. And we're going to talk about using the bucket approach. Liquidity for each asset. So how liquid is each asset and how do you get out? I kind of touched on that a minute ago. How do you get out without affecting the market? How liquid is that asset? How long does it take to sell it? How do you sell it? How do you present yourself to market when you're selling it? So that everybody else doesn't sell, especially if you're an influencer like myself, that becomes very important. And then your exit strategy for each asset, meaning what are the big milestones and signs for when you're going to get out? You have to know your liquidity, but you also have to know when you're getting it out. And so the last two steps are probably some of the most important. But a lot of these things you need to think of when you're setting up your investment, when you're buying in the first place. If you're not thinking about steps 2, 3, and 4 when you're buying an asset, then you could be in trouble. I don't want you guys to be in trouble. So we're going to talk about risk assessment. I worked in corporate America for 25 years. I was a risk assessor in many different roles. I worked in information technology, cybersecurity, as an auditor, in finance. And so I became very good at risk assessment because all of those fields required you to understand risk assessment. And so I had a lot of formal schooling over risk assessment. My master's degree had a full class on risk assessment, so it definitely was important. But informally, I had to risk assess things for these large companies and put them on spreadsheets and do presentations and make the case about why this is risky and why that's not risky, and make multi-million-dollar and sometimes multi-billion-dollar decisions based on that. In addition, when I did my real estate investing, my Forex investing, my stock investing, I had to, and even now my gold and silver investing, I had to understand risk. If I didn't properly understand risk, I was going to get into trouble on those investments because everything has risks and you have to understand those risks and how to mitigate those risks. The other thing is, outside of investing, what are the risks in the economy? I'm going to give you an economic example here on the next slide about how you invest for a risk in the economy. We're going to talk about shortages, and we're going to talk about how here's a risk. How do you address that risk by taking on a specific type of asset? And then what are the risk mitigations, and then how do you get out? So I'm actually going to use a non-investment example of risk assessment, because in your risk assessment, it needs to not only be how you're investing, but what are the risks of the market? If you're investing without understanding the macro risk or the micro risk of each market you're getting into, you're in trouble. If you're just dumping money into Bitcoin without understanding monetary policy and current monetary theory, I'll be honest with you, you're in trouble. Or the regulatory environment. Okay, if you're buying real estate and you don't understand how the winds are blowing in terms of taxation, you could be in trouble. Okay, so those are the types of things you want to think about in a risk assessment. So in a risk assessment, you want to determine the risk to your finances, identify the source of the risk, measure the likelihood of the risk, address the risk, and constantly update the risk assessment. And it's a circle as shown here in the diagram. You want to identify, assess, and address. Identify, assess, and address. Over and over. You don't do it just once. You're constantly updating your risk assessment. Here's an example: long-term supply shortages caused by a lack of base metals and minerals. This is something that I've talked about Mondays on our program, and even in some specials on Sunday and during the week, about the supply shortages. And the supply shortages are going to come everywhere. It's not just the boats that I've talked about. It's not just the end products in Walmart I've talked about. It's also talking about the mining and harvesting process, the exploration process, because we don't get the boats and we don't get all of our products if we don't have the base minerals and stuff that goes into them. Boats, use fiberglass, they use plastics, which is oil. They use metal, which is metal mined out of the ground somewhere. And if we're going to have shortages on the very beginning of the supply chain, that's going to affect our ability to get stuff at the stores later on. So the risk here, and what I do this in spreadsheet form. Now, when I get into making the actual course, I'm going to show you the spreadsheets, and I'm going to give you templates that you can use for yourself, and you can modify it however you want if you want to do your spreadsheet differently. But I'm going to give you some of the templates that I use when I'm doing a risk assessment, and it really helps. And for those of you not really familiar with spreadsheets and stuff, I'll show you how to set this up on the program. You don't have to be a wizard at this. I use the KISS principle: keep it simple. Keep something simple so they actually come back to it. So I'm not going to make it super complicated. We're not going to use advanced software. We're going to use common tools so that you can understand and you actually take the time to do it. And all you need is a computer, a laptop, a tablet, whatever the case may be, and some sort of spreadsheet software. You can use Google Chrome if you want, and you can use a Chromebook, and you could use Google Docs if you wanted, okay? Or any of the other free spreadsheet software. So you don't have to spend a lot of money to be able to do this. All right. Getting on to the risk example, the risk is shortages of common goods. What is the result of that risk? Lower quality of life, less medicine, less food, high prices, political and cultural instability. The last one, political and cultural instability, will come about if people don't have stuff that they need to feed their families or to take care of the medical issues. You'll start to see riots and demonstrating and stuff like that. And that in itself is a risk, because if you live in a populated area, there's people rioting outside your door. It may not be safe to let your kids go outside and play, or people may be robbing cars or breaking into homes, looking for supplies. That crime would go up. So one of the risk mitigations is where you live. Okay, it's not just getting the goods, it's actually where you live. And we'll get further into ancillary risk and adjacent risk, and I'll define those terms when we get into the course. And I'll talk about how one risk can lead to another and how you need to examine all the different angles around a particular risk and see, does that risk lead to another risk, so that you can have a really built out risk portfolio, or a risk register, if you will, is what we call that. So what's the risk probability shortage of common goods? I'm putting it medium 50%. Now, right now, we have most of the goods that we need. I think in the medium term over the next 2-3 years, it's going to get a lot worse. So for right now, it's medium. But as we get closer to those end product supply shortages due to a lack of harvesting and mining, a lack of available goods, that risk probability is going to go up. It's going to go up to medium high to high and to critical at some point. So it'll go from 50%, 60, 75, 80, 90. Okay. But right now I'm putting it as medium for short-term risk. And that's how we're going to identify that. And that's good, because it means we can address it. When the risk is medium, from the time factor of that, we still have time to address it. If the risk is already critical, it's too late. I mean, it's literally too late to do anything about it. So we want to address all our risks when they're in the small to medium from a time frame perspective. So mitigation strategy, the next column. One, identify the critical needs. I don't need this. I'm going to use a hypothetical example because I'm not diabetic, but I need insulin because I'm diabetic. I need medicine for one of my kids because they have some sort of rare immunological disorder, and there's a special drug that we need. Okay. You know what? I also need toilet paper. Let's get basic here. I need dry goods. I need paper towels. I need stuff to live every day. Okay. You may have allergies like I do, and you'll need Claritin, or you'll need cough drops or something like that, cough syrup, stuff to reduce fever, and your kids get sick because kids get a fever of over 103 and it gets very dangerous. Could be brain damage, right? Those types of things. You want to identify what are your critical needs based upon your family. If it's just you, if it's you and a partner, if it's you and a full family, if you have extended family or parents that you're taking care of, okay, you're identifying your critical needs to go all the way out there to all the things that your immediate family needs that you're taking care of. Identify sources for them. We talked about going to the Asia market and getting toilet paper when Walmart had run out. Did you know that there are other stores that may have toilet paper for you? Or there are other stores that may have other things that you need? So Tractor Supply may have certain types of goods that you need to feed your animals. And you've never been to Tractor Supply before. You got cat food at Walmart or Target. Well, I could go over to Tractor Supply over here. Identify all sources. Collect supplies ahead of time. So you want to start stocking a little bit ahead of time. So a little bit extra toilet paper, a little bit extra insulin if you can get it from your doctor. And how you store that, because insulin has to be stored at a certain temperature, and how long it lasts, that needs to go into your mitigation strategy. How far ahead can I mitigate the risk of an insulin shortage? Because insulin doesn't last forever, right? And that's, medicines a lot of times don't last forever, and certain perishable goods don't last forever. So we have to take all of that into account in our mitigation strategy. And then build a network in case of extended outages. What happens if that outage? We originally think that the supply shortage could last 6 months, but what if it goes 2 years? Or what if we think the supply shortage can be 2 weeks on a critical medicine, but it ends up going 3 or 4 months? So you need to build a network in order to get stuff that you need in case your original set of supplies runs out. The cost to implement strategy, once you do your chart of all your critical needs and the cost of each good and how much of that you want, you'll come out with your overall cost. I'm guesstimating 10 to 15,000 here for the average family. It could be much higher. If we're talking about long-term shortages due to an economic collapse, this number could go to 50,000 to 100,000 very quickly. We're talking about long-term food, long-term, all this kind of stuff. And then that's when number 4 here on the mitigation strategy becomes more important, because if you're in a long-term financial crash or you have a currency crisis and you're having a little bit more crime and stuff like that, you may need to rely more on your network. Okay. And we'll get more into the examples of specific financial strategies too. I'll talk about real estate, for example, and I'll say, what happens in a down real estate market? Do you sell during a down real estate market if you're going to get less for your property? Did you build that into your risk mitigation plan? If you're trading Forex, did you build in your risk mitigation plan a negative news event that comes out? So you're trading, let's say over 3 days, negative news event comes out, which affects the currency pairing you're in. Did you build a risk mitigation strategy for that? You didn't know the negative news was going to come out. And on Forex, very quickly, you can get margin called because it's a leveraged investment. Did you plan for that? So we'll get into this. We'll get into macroeconomic risks, and we'll get into specific financial investment risk and strategies as well in the program when we get into it. All right, now on to asset allocation. You need to develop buckets of assets designed to address your individual risk assessment. So one bucket could be crypto, one bucket could be real estate, one bucket could be cash, one bucket could be gold and silver, one bucket could be stocks, 401ks, pensions, all that kind of stuff. You need to have a bucket approach. And how are you allocating your assets? If you're all in right now to paper assets like stocks, bonds, and you're not into other things because you just shoved a bunch of money into a 401k, 403b, Keogh, simple, IRA, pension, all those kind of investments, you may be overweighted. You may want to rebalance, because if you're all into one thing, whatever that one thing is, even gold and silver, and you're not allocated to a couple of other buckets, you could have some issues with your financial plan. Gold and silver is great because it's money long-term, but if that's all you have and you don't have other things, you could be misallocated. Okay, so we want to talk about how to allocate. And I use the bucket approach, and what I do is, how much do you fill each bucket? 50% here, 75% here. How much do you put in each one? We'll put that in the spreadsheet as well. I'll teach you how to do that. Asset allocation is extremely important. You don't want to put all your eggs in one basket, although during certain times, having the majority of your eggs in one basket can be okay. That's why I'm heavy gold and silver, but I also do farmland. I also have cash. There are a couple other investments I'm looking at, investing in businesses and things. And that's how I allocate it, my assets. And right now I'm not in any paper asset. And people are like, you're leaving profits on the table. Yes, I am. But that's part of my risk mitigation strategy, because I know the risk of a stock market collapse is getting higher every day. So to mitigate that, I've leveraged out of some of those investments. And we'll talk about proper asset allocation during the course as well. Here's an example. Shortages of common goods. We're going to go back to shortages of common goods. Asset type is real goods. Mitigation level high. I want to mitigate that. So I'm putting this on high because I want to mitigate it. Right now, the risk is medium, but I want to mitigate that by really going aggressively into that, because I think that risk is going to go from medium to medium high. So the mitigation level is, how are you going to act right now? Even though the risk is medium now, you want to act ahead of time. My mitigation level goes to high, because I suspect that shortages are becoming an even bigger issue as we go on, for macroeconomic reasons, for lack of funding of the exploration sector reasons, things like that. So my mitigation is going to be high, even though my risk right now is medium. Why? You want to implement your mitigation strategy and your asset allocation before the risk manifests. If you're doing it while the risk manifests, you're screwed already. Okay, you want to do it before the risk manifests. How asset mitigates the risk? If I buy all the goods that I need, I'm directly addressing the product need. It reduces the price risk by getting it early before the prices go up. So if I get it early, it's cheaper, it reduces that price risk. What are the residual risks? This is a key important concept. What are the risks left over? In your mitigation strategy, you're reducing your risk exposure to something, in this case, supply shortages. You can't get rid of it completely. It's very rare you can address any risk completely. And if you're trying to address one risk completely, that may not allow you to address the other risk because you have limited resources. So the idea is to mitigate the risk, not necessarily to get rid of it. So there are always going to be risks left over. We need to identify those so that we understand what they are and we have them in our mind and we can plan for that down the road. So determining exact amount and type of goods. Maybe you misallocated and bought too much toilet paper and not enough insulin, right? You can guesstimate the best that you can, but one of the residual risks is you don't know exactly how things are going to shake out in the future. So you may be misallocated slightly. How do you deal with that? The residual risk. You need to, that may be another risk for you on your risk spreadsheet, or you may just build another column on your risk register and say, you know what, I'm going to do this. I'm going to sell all my toilet paper to the local, whoever, to some friends I know who aren't stocking it up, and they'll give me something of value, right? What happens when stores run out? What do we do if shortages go beyond our estimated time frame? I used that insulin or that medicine example earlier. You can only get so much medicine ahead of time. What happens when that runs out? Where's your network? What do you do then? That's a residual risk. All right, asset liquidity. Okay, how liquid is your asset? This is where we're actually going to get into not a macroeconomic risk case, but are actual assets. So you have an asset, how do you get out? Well, I've got lumber futures here. This is just a randomly a chart I pulled up because it's perfectly illustrative of markets. So you see a nice build up and then a nice sideways move and then up and then boom, crashes back down. Why? Because at some point, everybody had bid up lumber futures because of the shortage of lumber, and then more lumber was being produced and sourced, and all of a sudden everybody got out of the futures market. When the prices of goods and commodities are determined by derivative markets, this is a normal pattern, unfortunately. We see this in gold and silver all the time. And it's unfortunate that the derivative markets control it, but they do. In any case, if you're selling out of an asset, let's say you're exposed to lumber, okay, you're a business or you're trading lumber futures. And you could use, instead of lumber, oops, sorry, let me go back. Instead of lumber, let's say we're looking at this as a crypto chart, or we're looking at this as a gold and silver chart, or as a real estate chart. Just substitute. It doesn't matter. It's just an example. So for the example, your escape plan, you don't want to wait here to sell because everybody's selling and you're going to have a cascade fall. You're going to put in your sell order and it's not going to be fulfilled because there's no buyers. And so you're going to get a much lower price. You're going to get a price down here when the buyers come back in the market, and they're buying cheap, right? Because buyers are smart. Buyers buy when it's cheap. So your escape plan needs to include stair-stepping out of your position, okay, during up period. So let's say you already know you're getting out. You may sell a little here. You may sell a little here, a little tranche here. And then it crashes and you're like, no, I'm not selling during the crash. I'm going to hold. I'm going to wait for the buyers to bid it back up, and I'm going to sell my last tranche here. This is how you properly execute an escape plan in an asset, especially a derivative asset like a stock, like a futures, like a crypto, things like that. The way that you get out, you don't want to sell at the same time everybody else is. You want to sell a little bit ahead of time and get out while it's still rising so that you can stair step your way in there and everybody else doesn't figure out what you're doing. It's not only you selling your asset when you need to, it's selling against the rest of the markets. You have to understand your market. Okay. So that's asset liquidity and how to use asset liquidity to execute your escape plan. So this has been a preview of the course that I'm going to do. This has been the second part of the preview. I got a little bit more chunky into it and explaining what's going to go on. Next steps, I'm going to develop a program in much more detail in the preceding material. It will be introduced to those that support us on Patreon as a value add for those that are supporting us. Those not on Patreon platform will have an opportunity to purchase a course, and we'll wrap it up into a course and I'll present it to you if you want it. And we want to share this with as many people as we can so they can benefit from the valuable information because we think it is super valuable. And this is going to be a value add. Now, I'm not putting this on YouTube, one, because it's going to take me an immense amount of time to develop this. It's actually going to be a course. And so there's a lot of value there. So we're going to present it as something that you can contribute and help us out with for that. But also it doesn't play as well on YouTube because it goes deeper. So this is going to be a case of where I'm taking a lot of the knowledge I've developed as an investor and looking at the economy over the last 20 plus years and put it into a concentrated course for those of you that want it. So we want to make that available to you. We appreciate everybody supporting on the channel. We support everybody for supporting us through Patreon, which we've done very well with, since we released that about a month and a half ago. People have really come to support us, and we really do appreciate that, guys. It does help. We're running a full-time business now. Most of the content we put out is free, but getting that help from you guys and these opportunities for us to provide you, deeper analysis is a way that you can support us going forward. So that is going to wrap it up. You guys are headed to Thanksgiving. We're going to make this short because you got Thanksgiving holiday. Bless you and all of your families. I hope that you have the most wonderful, safe, and fulfilling Thanksgiving holiday, and you have time to meet with your loved ones wherever they may be. For those of the loved ones that could not travel to see you, of course, we've got Zoom and we've got FaceTime and all of this technology. Use that to your advantage. I know that I will be reaching out to my family as well, and appreciate all the wonderful blessings that we've had. And even though we've had all these wonderful blessings living in this country and experiencing the lifestyle that we've had, remember, we got to think about risk and how we structure our investments and how we deal with those risks. That's key, and that's important to surviving what's coming up, the big changes in the financial system. So be thankful, but be mindful and be prepared. That's the number one thing. That is the theme of this video. Thank you so much, guys. Have a blessed Thanksgiving. I will see you on the other side. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.